It was expected, in fact long overdue. When a country needs to import everything and their foreign currency reserves steadily deplete, this is inevitable.
Yes, things are going to get harder. Communities are going hungry. They have been going hungry for a while. They were down to 1 meal a day even last year. Now with the gas crisis, the energy crisis, it is right spread across the country who are really struggling to put food on the table today.
There are huge debts to pay back too, but nobody is giving new loans so far. Only temporary credit lines from neighbors. No humanitarian aid either, because this is not a famine or war-induced misery, but mismanagement of the economy. Everything Sri Lanka did till date is now dismissed as stupid. Everybody suddenly seems to know what the country should have done. That includes the World Bank and the International Monetary Fund also. The same team which was providing hefty loans and crash courses on financial management. That too for decades.
Welcome to the money train. The COVID crisis and the ongoing Ukraine war has started shaking down the nations. Sri Lanka is the first, but many more are waiting in the line. Globalization is proving junk globally. The system we created by connecting all the places on earth through trade was unjust and unfair to many, and it collapsed during COVID. Poor and small countries are paying its price heavily. Yes, Sri Lanka has committed many crimes, many sins, but the decisive blow came from the unjust global supply chain and the recent disruption. Also, the price hikes that followed.
Traditionally, Sri Lanka exported two primary commodities, tea and rubber. It also gets foreign currency from tourism, garments export and remittances of those working abroad. And the country imported everything, even food. This delicate balance broke down when the commodity prices fell globally in 2012. And since then, its exports slowed down while imports increased. Attempts were made to bring in substantial capital investments, but nothing materialized.
We actually had big Japanese investors, electronic manufacturers who were ready to set up in Sri Lanka. They left because of the violence that erupted in 1983. They went to Thailand, Malaysia, etc. They never came back. Sri Lanka is a small economy reliant on trade. We don't have a large domestic consumer market, so exports necessarily are the way forward. So if you look more recently in the last decade or two, we have become more inward looking on trade. There has been an anti-export bias. There's been an increase in protectionism, in crony capitalism coming in. And so the dynamism, outward orientation, export orientation has diminished over time.
Multilateral financial institutions have been in Sri Lanka since the late 1970s. It was one of the first Asian countries to embrace globalization. When the economy was slowing down, their advice was the usual: bring down government expenditure, keep the fiscal deficit low. But that resulted in further economic slowdown. In short, high consumption from imports with no substantial production, income or self-reliance. The fate of Sri Lanka was sealed long back. Then came China with its fat checkbook. Huge investments poured in for infrastructure projects, Colombo Port City, Hambantota Port, but unable to pay back the debt. These assets' ownership went to the Chinese. The country lost billions in income, and there were other debts to pay too.
One of the projects is Yangwe irrigation project, and there's another project called Nilwala Ginganga diversion project, which 400 million has gone somewhere, and we don't know what has happened to that money. And those are called illegitimate debt because there's without giving any benefits to the country, so they continue to pay back those money. Some of them are road projects, some of them are irrigation projects, including the Aruakaru garbage waste disposal facility, which don't operate at all, and it was flooded because it was constructed in the wrong location, and it is not operating. It's more 101 million US dollar project. So and on those all adding to this indebtedness.
Now Sri Lankans think that IMF loans were better because such was the squandering of money from bilateral loans. With the IMF, at least there will be some restrictions, they hope.
There is some framework. When it's bilateral lending, especially from countries like China, there is little to no framework. So it helps the government to implement those projects, use that money in whichever way they like, without much feasibility, without much consultation. And that is what has caused the unproductivity of those assets created using the Chinese money.
One of the former finance ministers said, so they talk to ADB for 2 years and they get 50 million, but they talk to China for 2 hours, they get 200 million. So that's how easy money they got from China. But this doesn't mean China is the only culprit, but even the World Bank ADB did not taken care of the national economy.
Total debt $56.3 billion, but the bilateral loans are minuscule compared to the market borrowings. It's 47% of the total. If you default on bonds, you're out of the market for a long time. No mercy at all. And every year, Sri Lanka needs $6 billion to pay interest alone. To make things worse, the Rajapaksa government made sharp cuts in indirect taxes, resulting in 25% drop in tax collection, reduction of tax base by 33%. Noting the sharp fall in revenue, the international agencies downgraded the country's ratings, and that affected their capacity to take further loans. Then, out of panic, the government stopped importing many items which it thought was unimportant. That included fertilizers also. Declaring Sri Lanka a totally natural farming destination, fertilizer import was banned totally. The result was catastrophic. Agriculture production crashed. Even its major export commodities, tea and rubber, dwindled. One thing led to another, and now the whole nation is in the streets.
How much worse can it get? There's no petrol, there's no diesel, kids can't sit their exams because there's no paper.
Discussions are going on at various levels to find a way out. But everybody who is willing to help Sri Lanka needs something back. IMF and World Bank will tell them how to run the country. The neighboring countries need access to strategic locations and lucrative trade deals. Sri Lanka will have to choose the lesser evil, or maybe all of them, because time is running out, not only for the government, but also for the people. Moving on to another debt repayment story. The whole world is waiting to see how Russia will repay its international debts. With half of its foreign currency reserves frozen in US banks, everybody knows that it's a tough task. But so far, Putin hasn't defaulted even a single dollar that was due. And now he is going on the offensive.
Pay in ruble and not in dollars, says the new order signed by the Russian president to the foreign buyers of gas. It further instructs to open special bank accounts for the conversion of foreign currency to ruble. Russia is fighting the American sanctions by removing dollar from their trade transactions. So far, European nations have not reacted, but they have time to decide. The payment on fuel delivered since the order is due only by late April or early May. The immediate response was the increase in the value of ruble. It bounced back to 82 to a dollar. Remember, it had crashed to 137. Putin hasn't stopped there. He has floated the idea of Western countries depositing gold with Russia to buy rubles, with which oil and gas can be purchased, or any other commodity. And it has already started buying gold. 500 rubles for 1 gram of gold. Setting gold standard for ruble will definitely counter the collapse of the Russian currency reeling under sanctions. Russian Foreign Minister Sergei Lavrov came to India last week with an offer, the rupee-ruble trade transaction, eliminating dollar.
I would recall that many years ago we started moving in our relations with India, with China, and with many other countries from using dollar and euros to more and more use of national currencies.
Russia will pay Indian exporters in rupees and India will pay Russian exporters in ruble. During the Cold War, both nations had done it, and also a few years back for a huge defense purchase. Moreover, China and Russia have such a robust system. But there's a catch. If the value of ruble continues to crash, India will be at loss. It's unlikely that India will readily accept the offer, but the discussions are still on.
The amount of arms that we have bought from Russia in the past few years, and these have been backed by joint venture projects. So many of these arms are going to be manufactured in India. So my expectation is that even if Russia holds onto certain amount of rupees in the short run, over the medium term, this problem can be taken care of because of the joint ventures. So Russia can actually invest in these joint ventures and even things up.
The US has retaliated with a total freezing of Russian foreign reserves deposited in its banks. Earlier, it had allowed to use such funds to pay interest of its bonds on a case-to-case basis, but now that too is withdrawn. Meanwhile, China is testing waters with its own currency, renminbi. Renminbi is a fairly stable currency and already used for international trade, but so far limited to a few countries. Last month, Saudi Arabia is reported to have signed a deal with China to sell oil in renminbi. That's a significant move. And China's financial messaging network, the cross-border interbank payment system, has some international following.
SWIFT is now collaborating with CIPS, the Chinese messaging system. And SWIFT thinks that, the Chinese yuan, the renminbi, is going to be a strong currency, and there is enough justification in collaborating with CIPS. The other thing which is happening is that the use of renminbi in China's trade with other countries almost accounts for 20% of total China's trade, which is quite a large amount. So there are these developments happening, which for the first time seems more serious than ever before.
We must protect the position of the American dollar.
In 1971, when the US president announced that they will no longer honor its commitment to exchange dollars for gold, the world was shell-shocked. The very basis of international trade was shaken. But the dollar continued to be the medium of exchange as there was no option. But this time there are many. It seems the financial war against Russia has moved into unexpected territory. Dollar dominance may not go away in a day, but international trade using local currencies is definitely going to spike. What happens after that depends on many other factors. World will have to wait and see. Amazon get its first labor union. In one of the biggest worker victories, majority of employees in an Amazon warehouse in New York have voted in favor of being represented by Amazon labor union. From now, the company cannot set the pay and working conditions without negotiating with the union. The movement started last year during COVID when the workers walked out of job protesting poor working conditions. Modi government had plans to investigate former Reserve Bank Governor Raghuram Rajan for allegedly setting interest rates favorable to developed countries. But the investigation never happened and the RBI went along the same path of Raghuram Rajan. The news website Reporters Collective Story further says it was part of Union government's attempt to make inroads into the RBI and curtail its independence in setting the country's monetary policy. Baba Ramdev's Patanjali Group is again in controversy. SEBI has directed Tuji Soya Industries, a subsidiary company of the group, to offer option to investors to withdraw their bid in the company's 4,300 crore follow-up public offer. The decision came after unsolicited SMSs with dubious claims about the company were sent out. Baba Ramdev had also urged his followers to buy shares openly. The company was earlier in news when it was bought by the Patanjali Group after more than half of its debt of 12,000 crore were written off by PSU banks. Income Tax Department has closed its investigation against family members of Mukesh Ambani. It's regarding alleged evasion of taxes on foreign income. The case is connected to a company based in Cayman Island. An internal noting by a bank official had initiated the investigation. But now the department says such an inquiry is unwarranted or just an internal memo.
COVID crisis has drenched almost all the nations in debt, deep debt, and nobody knows a safe way out. What's happening in Sri Lanka is just a trailer. Tomorrow it can be Pakistan or any other small nation. But as time moves on, size may not matter. It's high time the world think of an alternative to the present financial systems. We leave you with that thought. Goodbye and see you again.